Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. We'll get started here in about a minute and a half. We have a lot of people that registered for this webinar today. We're really excited to bring you some new programs and hopefully help you grow your business in 2024 and find new ways to grow your business in 2024. So I'll introduce our subject matter experts here in about a minute and we'll get started. Just some housekeeping stuff. This is going to be recorded, so we need our subject matter experts to watch it. This is going to be recorded. A recording of this will be sent out to you before end of day tomorrow. It is everything we're going to do today is from our website. So we always get questions. Hey, can you send me a copy of the slide deck? Everything we're doing here, I do have two statistics that I will bring up that will be part of a PowerPoint, but we'll make sure we get those out to you also. So get started here in about a minute. A lot of people still logging in. Hopefully everyone's 2024 is off to a great start. And we look forward to helping you grow your business in this upcoming year and beyond. So give us another about 30 seconds. We'll get started here. A lot of people logging in. I think we've got a webinar next week also. I think it might be debt service coverage ratio. So just to give everyone a background, we've been doing these deep dive product webinars since September 2020, and it seems like everyone can't get enough, and it's because of one, Angel Oak, and then two, our subject matter experts, because of the expertise that they bring to you day in, day out, and the experience that they have here at Angel Oak. So without any further ado, again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. I'm going to do ladies first. Lisa Lee, please introduce yourself and just give us a little bit of background.
I'm Lisa Lee. I'm located here in northern Utah, just about an hour north of Salt Lake City. I've been in the industry for about 30 some odd years. I started as my wholesale career as an account executive in subprime back in '97, where of course I was in subprime and we had a lot of fun until we didn't anymore in '07. And then I went into retail for a minute, came back, waited for Angel Oak to come around. And I've been here for over 7 years. So this is the space obviously that we all love to be in, to where we can create loans with you guys and get them closed.
And so Lisa started when she was born, basically. So, and Chris, please introduce yourself, please.
Hi, Chris Taylor. I'm in Denver, Colorado, and I've been in the business also for 30 plus years. Can't believe it. Most of it in subprime, at least half of it in retail. So I know a lot about what you go through. And I've been with Angel Oak almost since the beginning, 8+ years. Just really been an exciting time to roll out, new products, especially like today. Yep. And excited to work with everybody on this.
Yeah, so between the three of us, we've got over 25 years experience just here at Angel Oak. So that's pretty amazing. And then add on top of that, the experience and just on the wholesale side of the businesses, which is truly amazing. Again, this is being recorded. We will get a copy of this recording out to you before end of day tomorrow. I apologize for that. All your questions come through the question queue. We're going to start, before we get into highlights of the new programs we've recently rolled out, we're going to do a poll question. Who has ever originated a second lien, whether it's a closed-end second or a HELOC, ever? So kind of different from the last 12 months if you've joined us on other webinars. So while we're going into that poll, and we'll show you the results here, I did want to share a slide here about one of these statistics we have. Hopefully, I'm going to ask Lisa and Chris, can you see what I have up here?
Yes.
The PowerPoint slide?
Yes.
Okay, so before we release the results of the poll, I did want to share a few statistics with everyone here. 40% of the homeowners today own their house outright, which is crazy. 32 trillion, that's correct, $32 trillion of equity people have in their houses today. And then 47.5%, houses since 2019 have appreciated 47.5% since 2019, and that's the national average. So Just wanted to share with you, we'll get this slide out. We'll share another slide with you guys later today when we talk about something else. So what do we have for our poll results? Wow, 50-50 would have lost that bet. So 50% of you have closed a second lien and 50% have not. So I think that's really, that's good for us here today. So that's great. You're here to learn about the two programs we do have. So we're going to get started with Lisa. And Lisa, we're going to talk about our closed-end second here. So let me move a few things back. All right. So, sorry. Apologize. This is live too, so everyone knows that. So Lisa, take us through together with highlights of our closed-end second.
Sure. Yeah, this is high level. We expect to have a ton of questions as we're prepared for at the end of this. So basically, in just this week, we received our latest enhancement, which will now allow our loans to go up to $750,000 max loan size. That's on rate and term and cash out, so that's huge. Minimum loan size is $75,000. This is the closed-end second mortgage, right? So it's fixed only 30, 20, 15, or 10-year terms. If you're looking for interest only, obviously you're going to have to flip to the HELOC. This offers for cash out, rate and term, owner-occ, second home, and non-owner occupied, which is great. Single family townhomes, 2 units, and warrantable condos. So no non-warrantable condos allowed on this. 12 months bank statements or 24 months bank statements. We only allow for business bank statements on this product. And you must have a minimum score of 720 for the bank statements. And then of course, full doc, you need a 700 score. That's the minimum score. Up to 50 DTI. And there's 2 notes that you cannot do an owner occ on this in Texas. And evidently you can't do seconds in Tennessee from what it sounds like. So.
Yeah, we're working on that Texas on the primary, so resident. So, stay tuned. We're working feverishly hard on that. So again, any questions you guys have, feel free to put them in the question queue. We'll get them answered. And then we'll talk about some great tools we have to help you not only market yourself differently, and we're going to talk about marketing at the end and all the great tools we have to market yourself, but we're also going to have show you other tools that we have that where you can get your rate quotes, and then also where you can build a blended rate calculator. So when you are talking to your borrower, you can really tell them your basically effective rate with your first and your second. So, so Chris, we're going to touch on brand new, literally, what did it roll out yesterday? I think it was. Yep. So we're going to show you our HELOC second. There we go. Chris, give us some highlights on the HELOC second.
So this is a home equity line of credit. So the borrower's only charged for the money that they use. We're really excited to have this product out in the market. We right now we're at a loan amount of up to $400,000. It's a revolving line of credit, interest only payments during the draw period. And this is a loan term from 15 to 25 years. Full doc, and we allow business bank statements on this program now. Owner occupied second home and non-owner occupied is also available. Eligible for U.S. citizens and permanent residents. No restrictions on how funds can be used. And again, it's not available right now and owner occupied in Texas and not available in Tennessee. 720 minimum credit score and a max LTV of 85.
Yeah, so guys, those are the highlights, right? There's a lot of other stuff going in here, not in Tennessee. Sean, don't know. It could be compliance issues, so apologize for that. But Chris Taylor, we've got a question here from Chris also. Do you allow any mortgage lates? He has a client that has a 1x30 late in August and September.
No, I don't believe we would allow that.
Yeah, Chris, not our Chris participating here. Chris, no, we don't. And again, a lot of the stuff we do right out of the gate, especially on new programs, we're pretty tight on our guidelines, right, when we roll them out. But I will tell you, on the programs that we've had around forever, we're pretty generous with exceptions. About 30% of the loans we actually close here at Angel Oak are exceptions. So right out of the gate, Chris participating here. We would not, but you know, as you get further and further though, Chris, from those mortgage lates, we have to be 0 times 30 here for 24 months on that. But as you get further and further away from those lates in August and in September, we do have a cash out option that allows maybe a 1 times 30. So that might be something to look forward to and contact your account executive with. Well, so Mark is asking, Mark is left though, but we'll ask this question. Lisa, is non-owner occupied available in Texas? I should answer that, but I'll let you answer.
You should answer that, yes.
Okay, I'm here in Texas.
Right? Go ahead.
Yeah, we do allow it on second homes and non-owner occupied investment properties here in Texas. So you can take advantage of that. We do have a lot of investment properties in Texas for a lot of people. For obviously the market here is still very, very hot here in Texas. So thank you for that question, Mark. Hopefully you'll come back. We will get you a recording of this. Anna's asking, can you do a profit, a P&L, basically? And Chris, I'm going to throw this over to you, a P&L on this. I don't believe so.
Right now we're at business bank statements.
Yeah. So,
and again,
so
you know,
Chris, I'm going to stay with you here, Chris, because Kyle's asking on the HELOC, and you mentioned it, but just repeat it for Kyle's purposes. What are the draw periods for the HELOCs?
So the draw period on the HELOC is 5 years, is the standard program right now.
Right, 5-year draw for the standard. If you do a 25-year, it's a 10-year draw, and if it's a 15, it's a 3-year draw. So, so that's a great question. Thank you, Kyle. You know, I'll answer this one, so I don't have to put you guys. John's asking any exceptions on the FICO scores. John, as I mentioned to Chris earlier, you know, right now we just rolled these programs out. Very few exceptions will be given on these right out of the gate. So, but you know, thank you for asking, and you know, work on getting that borrower's credit score up. Holly's asking, Lisa, I'll go to you. Can you use this as a first lien, meaning they don't have a first mortgage on their house? Go ahead, Lisa.
That's a great question, but yes, you can. So you can actually do a first lien HELOC if their house is paid off. So perfect, yeah.
Yep, great question, Holly.
Mm-hmm.
Chris, Craig is asking, on the HELOC, do you accept both 12 or 24 months? So kind of clarify that for Craig here.
Yes, on business bank statements for the HELOC, yes, we would.
Yeah, I just want to clarify it a lot. So you can use either 12 or 24 months of business bank statements. So the question would come, Chris, I'll stay with you on this. The question would come, why would you use 12 versus 24? So we usually ask that when we're doing our bank statement webinars. But Chris, if you don't mind, you know, answering a little further on that.
The two reasons is sometimes it's a price difference, and also sometimes the averages are better either way. So we try to give you the best of both worlds. So
yeah, and I'll kind of jump in here from like a public service announcement. Get 24 of them. You know, Lisa, what does it cost for us to calculate the income for them? 0, right? It's 0, nothing.
Yeah, so we love to look at, if we can get 24, it gives us the option and the ability to, you know, look both ways and save time for you and the borrower if they'll get them up front. So
and we're calculating them really fast. So
yeah, really quickly.
It doesn't make a difference. So
yeah, and you might have, you know, there might be maybe someone's seasonal with their job, right? Maybe it's a lawn care business, and you know, if we only have 12 months, well, they might not show this time of year wherever they are. They might not show a lot of income in January, February, December. Well, if we have 24 months, we can see that it is seasonal, and we're a lot better with 24 months. So again, as Lisa mentioned, you're only going back to your borrower once, right? You know, why bug them for the other 12 later on? So we're going to calculate that income for you. As Chris mentioned, we do it really quickly. So a lot of great questions coming in here. Lisa, I'll go with you on this. What does the 80% draw mean, Lisa, on a HELOC?
It's 80% of your total line. So if they decide they want to get, you know, they want to go to 400,000 or whatever, you're going to be looking at the initial draw would be 80% minimum of that total line that they're taking out, or the total loan that they want. So that's the initial.
Yeah, one other thing on that, Lisa, and for who was it? The draw. Sorry, Roberto. Sorry, Roberto was asking that question. Thank you, Roberto. One other thing, if they're drawing 80%, and let's just say that 80% is $200,000 of the 250,000. I hope my math did right on that. We're going to reduce that 200,000 also by their closing costs. So, just so if their closing costs are $5,000, they're only going to get $195,000 as their draw. So that'll be taken out of their draw. I just want to make sure everyone knows that. And when you're working with your account executive, again, any one of us across the country, about 60 of us across the country, all have experience like Lisa and Chris do. So they're going to be able to hold your hand through this process. So, okay. Chris, I'm going to go with you. Doug's asking about everyone's asking a lot of questions about HELOCs, and we know because obviously bank statements, from what I think, it's probably the first of its kind, a bank statement income for a HELOC. Chris, talk about the interest only part of during that draw period. So if you don't mind.
Sure. So, we had a Q&A internally, and one of the best ways to describe it, it's like a credit card. You're only charged on the balance that you carry at the end of the month, and that average balance is calculated in the interest payment on that balance only. If the borrower wants to pay it off or pay it down rather, they can pay it down after 90 days and carry a smaller balance, and then when they want to use it, there's no restrictions on that.
Yep. Joe's asking, Lisa, and I'll go to you. And again, these programs are literally hot off the press. Lisa, go through the appraisal, what we'll require, if you don't mind, for Joe's and everyone on this call, please.
So the appraisal, basically, if the loan size is below 250 and or it's below 80% loan to value, you can do an AVM, but it has to have a certain confidence rating that we're going to look for, which is 87%, yada, yada. They also, on the HELOCs, require an exterior. What are you laughing at me?
Yada, yada. I'm sorry. I love it.
Well, I don't know. I'm not an appraiser. Or we'll do a BPO, a drive-by appraisal, or a full appraisal. We do not allow transferred appraisals, though, on these second mortgage products, so you need to keep that in mind as well. And yeah, so I hope I reached that.
Yeah, no, perfect. That's why you're on here and you're giving answers and I'm not. So it's So Patrick's asking anything, Chris, I'm going to go to you. Anything unique on how we're underwriting bank statements? And Chris, you might want to talk about the pre-qual stage,
right?
And the income being used.
We have really streamlined we were one of the first to come out with a bank statement loan. So we, by now, have really gotten it down to a science. We get the calculation out quickly to you. Most of the time, we can approve it pretty quickly right away. Other times, if the income is not consistent or there's other issues, we work that out. We finalize the income before the loan goes to underwriting. So you know what that income number is. That's the number that the underwriter uses as well. And we stick with that number through the process. So there won't be any questions about income after the pre-qualification is complete.
Yeah, and I think that's critical. And as Chris and Lisa and all of our account executives across the country, they basically pre-underwrite the file. And Lisa 7 years, Chris 8+ years. They know what to look for, right? And it's being calculated. As Chris mentioned, that's the income that's going to be used throughout the entire process. And I was about to regurgitate some from previous webinars. We'll do them on TBDs. Well, these are second liens, so we won't do them on that. But we do them if you're doing a purchase on a bank statement loan. This is 60% of our business are done on bank statements. So I can promise you, we're getting that 100% right. So one question to go back to the income calculation. Who was asking that here? Apologize. What if the income is lower in the most recent 12 months? And who was asking that one? That was Bruce. Great question. That's why if you get us 24 and there's decline in income in the most recent 12 months, we'll just go with the recent 12 months. And if that income still qualifies, that's what we'll use. So again, our account executives are going to put you and your borrower in the best case scenario for them. So let's get back to a lot of great questions coming in. again, this is being recorded. If we don't get to a lot of these questions, because there are a ton coming in, we will have your account executive reach out to you, no later than later today. So we'll make sure that they get to you. Recording of this will be sent out before end of day tomorrow. So a lot of great questions coming in. Preston's asking, love that name, Preston. At least I'll go to you. Are non-owner occupied condos and 2 to 4 units allowed on HELOCs? And you might have to refer to your.
It says 2 units and warrantable condos can be done on the product, but as far as non-warrantable, no. So you'd run into, you have to be careful on those. It doesn't say 4 units, so it doesn't offer a 2 to 4 unit. We can confirm that for you and get back to you. It just now specifies as 2 units. So.
Yeah, and one thing I don't want to take away from, we're talking about 2 new programs here at Angel Oak, right? They're closed-end second. We've got HELOCs. We have a boatload of other programs like that allow cash out 2 to 4 unit non-warrantable condos. So, don't get, we're talking specifically here about 2 programs that we offer, but we have a ton of other programs that can satisfy all of your needs. I promise you that, other than government. So we're
Also,
here.
not all Fannie, Freddie non-warrantable, we consider non-warrantable. So we should be able to review the condo with you ahead of time to determine that.
Yeah, so the index, Wayne's asking, Lisa, I'll go to you here. Wayne's asking about the index that we use and then the margin, and we can talk a little bit about the margin, but specifically talk about the index that we're using.
So index is Prime, and you can find Prime. It's published once a month, I think the first of the month on the journal. The journal processes it. Why am I drawing a blank? Wall Street Journal, Paul, I apologize. And so, but Prime rarely moves, but so that's going to be your index, and then it's index plus margin, and the margin depends on your loan to value, your score, and everything else that you're looking for. So the margin is fixed. So once that stays locked for the entirety of the loan. Of course, the only thing that can move is the index, which is attached to Prime. So, right?
Yep, great, Lisa. And again, the margin, like Lisa says, LTV, credit score, all those things come in. And then I'm not an economist, but that 8.5 prime rate that's used, I don't see that. I think someone said earlier today that it's moved twice, I think in the last year. I don't think it's, again, I'm not an economist. I don't think it's going to move anytime soon. And if it does move, most prognosticators are saying it might go down. So, great question here. And I know we focus a lot on bank statements, Chris, but Katie's kind of drawing us back into the real world. What about full doc? Right?
Yep.
So,
we definitely allow full doc on both the closed end and the HELOC program. 2 years tax returns. The traditional Fannie Freddie calculation is what we consider a full doc income loan. So, so if you're already calculating the income of your processor, it's probably what we're going to end up using.
Yep. Yeah. I always say, you can give us bank statements. We're going to calculate it. Everyone on our team is going to calculate it the same way. You give everyone a bunch of tax returns, you're going to get a bunch of different calculations, right? But bank statements are a lot of what we do here. So, so this is a great question. So, and I think we got an answer. And this is Roberto asking. Thank you, Roberto, for a lot of great questions. Can we get into a third position, Chris, behind a first and a second?
No, not right. Not at the moment.
All right. Thank you.
Again, it's a new program.
Roberto, but, Lisa, I'm going to ask you this question on that HELOC. How are we qualifying the borrower? Is it interest only?
So what you're going to qualify the borrower, it's a great question. Depending on which HELOC you choose, whether it be 25/20 or a 15-year, we're going to qualify them 2% above the start rate. And it's going to be based on the repayment period of that draw, or of the HELOC. So basically, if you did the 20-year, which is a 5-year draw period, and then a 15-year repayment period, it's going to be qualified at 2% above the start rate at the 15-year prepay period. That's what you'd qualify them. Max DTI is 50. So back end.
Yeah. So hopefully that answered that question there. Patrick, asked a lot of great questions. Patrick, we're going to get to a great tool on our website called our quick quote tool. We'll get to that here. I know we're about half past the hour, so we'll get moving off some of these questions here in about 5-10 minutes. So keep them coming. And then what if we have, let me see this question coming in here. So we answered the qualifying income. So this is coming from Katie. 2 years. Yeah, so Chris, Katie's asking, does the self-employed borrower need to be self-employed for 2 years?
Yes, standard.
But,
and
go ahead.
yeah, and you know, not to be confused with the new one-year self-employed program that we're just coming out with, which we're extremely excited about. But again, we're rolling baby steps with the HELOC program. You know, we want to go with our standard bank statement calculation on business bank statements. So.
Yeah, and Joe, I'm going to let Lisa answer this. What if there are multiple people on the statement? So we're only allowing business bank statements. So Lisa, kind of talk about the percentages of ownership, if you don't mind.
Yeah, so we're going to look for everyone that's on the loan or on the statement obviously would have to be on the loan, but if they're on the if they're a partner in a business, sorry, I'm stuttering here. If they're a partner in a business, then we're going to take, whatever their percentage, their expense ratio is, and then we're going to divide that by by their percentage of ownership. So it just depends on how many partners are involved in that business. So they do have to own 50% of the business. So is that correct? 25%? I'm sorry, I'm talking backwards.
Yeah, no, and then on top of that, Chris, another great question. We're used to doing a bank statement, a deep dive into bank statements in a separate webinar. And we'll probably have one probably by the end of this month. And if you've registered for this, we'll make sure you get the next, whether it's a debt service coverage or the next bank statement deep dive. But Chris, and Joe's asking another great question here. What if we have one borrower who's self-employed and the other borrower is W-2, right?
Yes, we always allow that. That's a very common scenario, and we can definitely give credit for both. So.
Yeah, so Joe, what we'll do in that case, we'll calculate the self-employed borrower's income, and then we'll just add the W-2 income back for that borrower to qualify them for whether it's a HELOC, a closed-end second, or even just a regular purchase bank statement loan. So I think that's a great question. Income for. So just a couple more questions, and then we're going to get into some of our tools here. So returns. We're all right. We're half past the hour. I want to, we're going to talk about a couple of things we have on our website here. And again, everything's on our website here. We have some calculators here, and I want to bring up. You can see here we have calculators. I already have one in, and I don't want to spend too much time. So everyone on this call, right? We talked about how homes have appreciated since 2019, almost 50% across the U.S. So we have a great tool here. We call it our blended rate calculator, and I already pre-populated with the property value, current property value of $600,000, put in monthly insurance, monthly taxes. Obviously, we know that varies to wherever you live. I put in the first mortgage of $320,000, just in case they purchase a $400,000 house, put 20% down. It's now worth $600,000. Again, we'll talk about how much, and I'll show you guys here how many people have rates below 4%. But I put in a 3.5% rate on a 30-year fix. That's their monthly payment. Their LTV is 54. I put in a loan amount of $150,000 for a second mortgage, 10% rate, a 10-year fixed. This is their payment. We have a combined CLTV of 79%, but this is their blended rate calculator. So you're going to have a lot of people out there, and Chris and Lisa, feel free to jump in, who say, well, but the rate's 10%. But you have to talk to them. And if you ever listen to Barry Habib, now more than ever, you really need to be a debt advisor, right? So, but this is a blended rate calculator, and I'm going to pull up a second slide here because I do want people to be aware of all this intel out here. So, you know, a couple of things, 63% of the people in the US have a rate between 2.5% and 4%, right? They're not moving off those rates, right, guys? They're not moving off those rates. 85% have a rate of less than 6%. So, and you can see all the debt here, credit card debt out to, over $1 trillion, student loan balances over 1.6 trillion, auto loan balances over 1.6 trillion. The US customer in 2022 paid $120 billion in interest card fees and interest. There's so much, the average interest card rate out there is over 25%. Become a debt advisor to your clients. You've all closed how many loans since 2018, 19, 20, right? Everyone was doing them. These people have accumulated a lot of equity in their home. Their houses have appreciated. It's time for you to be a debt advisor and not just a loan officer. And having that blended rate calculator out there will help you considerably talk to your previous borrowers. And you know what's great, Lisa and Chris, about a HELOC second or a closed-end second? You're taking a seller out of the equation, right? You're taking a seller's agent out of the equation. You're taking a purchase buyer's agent out of the equation. And you're giving your borrower equity, giving them money back that they can use to grow their business or to pay down that credit card debt. I think it's really just, you got to get past the 2023, woe is me, all the rates are going up, my refis are gone. Create your own business. And I think our close-end second and our HELOC, bank statement HELOC, are great ways for you to help grow your business. And another excuse to go back and talk to your previous customers. Maybe they're not going to move. So I don't know, Chris.
Or use the money to buy another property. I mean, that we're seeing too.
Yeah. So I just wanted to share that with you guys, and I've got to get back. Oh, there we go. I want to get back to our website here. Sorry, I know I'm jumping around a little bit, but we have the tools here for you. We have the expertise like Lisa and Chris and all our account executives across the country. So I know a lot of people were asking about, can you show me a rate on this? So yes, we can. We have our non-QM quick quote. I'm going to go through this. I don't know if Chris and Lisa want to fill in some, but guys, we have it for non-delegated customers. Majority of our customers are brokers. It's pretty easy. The second lien loan amount, we'll use what we've been talking about. Hold on. Thought I had this already pre-populated. I apologize, people. So, Chris, we'll use you in Colorado.
All right.
All right, so here you have your blended rate calculator. I had I'm sorry, here's the rate. You can see the margin here. You requested an LTV of 65, CLTV. It's a max up to 85. So you can play around with this. Chris and Lisa are available a lot of the time, but this is available 24/7. So this is here for your ease. You don't need to be an approved broker to use this quick quote. Chris, you want to take me through how do you get a pre-quote to us?
Yeah, so the first step is to kind of price your loan out. It also gives you basic guidelines and tells you whether your scenario fits the guidelines. Right out of the gate, that's really helpful to know. In this case, now we have second lien, and now we have two different second lien programs, so you can pick one of, the one that fits your scenario the best. Also, just real quickly on when you're pricing the loan, we were doing this earlier today, the margin can go up or down depending on the loan to value, the FICO, other characteristics. So we saw that margin go from like 1.5 to 3 depending on the scenario. But anyway, after you see that program, the next step is to view rates, and you want to just select a rate. You're not locking the loan, you're just kind of selecting a rate that looks good for your borrower. and then you select that option, and then the next step is where you're going to port over your 3.4 file. That helps us, in our system, set up the loan. You do that next, and then the next step is to load up the loan documents, and that would be, if it's a full doc loan, a 1003 and a credit report is most important. If it's a bank statement loan, we want to see the 1003 credit and the bank statements, so that's what we're going to use to calculate your income after you hit submit. You can also answer some basic questions about their credit, who you are, your NMLS number, and so forth. Then you're going to hit submit. And when you hit submit, that goes right to us, your AE, and we jump on it right away to start working on your pre-qualification.
Yeah, and Chris, give us a time frame. I know bank statements might take a minute or two longer, but give us a time frame for, what are your turn times right now for doing a pre-qual?
I mean, I would say within 24 hours, we should have your pre-qual, and we're doing it a lot quicker. And it really depends on the issues on the loan. If we also kind of pride ourselves in getting exceptions in general. And if we do an exception, we ask for that up front before it goes to underwriting. So that can sometimes take, maybe 24 hours at the most. But a standard bank statement loan is, we're pre-qualing them in a day or less.
Yeah, and I think that's important, not just the turnaround time, but the expertise that we have, like Chris and Lisa are doing your pre-quals, and all of our account executives across the country, and how great, they are, and not only just great they are in the front lines, but the resources that they have, if they do have, second, third level questions to ask and get approvals on. So I like to say, you're not going to be published a pre-qual that, we don't feel 100% about. So I appreciate you guys for that. So a lot of questions we were getting during this is, how do, not only just how do I market myself differently, because that's what we're seeing a lot of people after 2023, like my guy, the sky has fallen. No, it hasn't, guys. You need to be looking for different people, different programs, and different ways to market yourself. So Lisa, I'm going to have you take me through our marketing portal and show us some of the great tools that we have out there.
Yeah, so you will need access to our portal, which would mean, so anything else that, just to make a point, anything as far as the tools, the blogs, the webinars, the resources, calculators, the quick quote, you can use without login. So you do not need a login. You can also download that on your mobile app. But you will need a login, so you'll need to be approved and have a login for access to our marketing portal. This is the same as where you'll find our underwriting portal as well. So in the marketing, once you get in here, you'll see the top tabs, go to the marketing stuff, and we offer anything. We make sure, of course, these are all updated and current, so they match all of our underwriting guidelines. We actually do close these products, so you're not marketing bait and switch. But anyway, awesome flyers. We have awesome, we have everything, all the tools that you need, and they're all customizable, which is the greatest thing. Here you'll see you can add, this is our basic deal, but you can add on the left-hand side, you'll see your logo. You can add your, your picture, your logo, your NMLS, any disclosures that you're looking for, your address, phone number, and it will, import right onto that, to the flyers. And once you do it onto one flyer, you have access, as you see there, the drop down of all of our flyers for all the programs available. So it's really cool.
Yeah, Lisa, I think that's, yeah, so we already have the closed-end second. Patrick from, Chinch Funding has already pre-populated this, but we showed the HELOC there. Now he wants to print a closed-end second, or any of the flyers. Like Lisa said, we have it for all of our programs, for bank statements, for debt service coverage. We even have a flyer in here for CPAs, because 60% of our business are self-employed borrowers for bank statements. Well, it's tax time, guys and girls, right? So, why not put a flyer together to go to your CPA and market to their database, so, but sorry, Lisa, go ahead. You want to talk about some of the social media stuff?
Yeah, we have the social media. So these are great posts. The presentations, we also have presentations in here that you can use to keep you on task. We do this every day, but you guys sell a million products, right? So this helps you to keep on task. If you do have a presentation for anybody, whether, whatever affiliates, business associates you work with, realtors, etc. So here you can see we have different options depending on what you prefer as far as your look. And you can post these anywhere. These are awesome for your social media posts. And it gives you something, like I say, we do it for you. It's not something that you have to create. You're marketing a ton of things. We do just non-QM, so you can pull from what we have here and use them anywhere that you're active on social media. So
Yeah, Lisa, I think I was listening to a webcast about 2 months ago, and the person was talking about social selling and, marketing yourself differently. Guys, we talk about serving an underserved borrower, right? So this is where I'll get on my high horse here is these are underutilized tools that we've created for you on your behalf to use. And all you have to be is an approved broker. We don't charge for any of this. You're just an approved broker. You can use them and we've created the content. We've created the content towards borrowers, and we've created the content towards realtors. So I get a little, because people, they'll get off this call and they'll go back to doing the same old, same old. And guys, we've created these tools. Just try it. I promise you, you will get hits on it. I promise you. So, and then last but not least, we have, obviously, let's talk about, Lisa mentioned a presentation, right? So, Chris, I don't know if you want to talk a little bit about the realtor. I know Lisa does a ton of them. A lot of our AEs do them all over across the country. So, let's talk about yours while I pull this up.
Yeah, we definitely pride ourselves on getting out there with you if you want us to, and give a presentation to some realtors. We have this great presentation tool that we use, and we're out there with a lot of our LOs doing presentations with realtors. I will say that one of the biggest benefits from it is you end up getting one of the realtors' loans themselves, and they become a believer in the product. And so it's been really fun for me to get out there and do it, because I've seen so much success. A lot of these realtors, they're the front line of defense, and if they know that these loans work and they see that they can get one funded themselves, a lot of times they just become a real believer in the product. You end up with that realtor and getting all their business. So.
Yeah, Chris, it's funny, and I'm going to use. We've had a lot of people ask a lot of great questions here, but I'm going to use. Where was it? I'm going to use Travis here. So, so Travis, if Chris or Lisa or any of our other AEs across the country are your AE, they go in there and all they do is say, hey, I'm just Travis. I'm just one of Travis's investor, right? That's it. Doesn't go in there with the Angel Oak name tag. I jokingly say it's like we're in the witness protection program. We don't bring cards. We go in there on Travis's behalf, and we talk. We're just one of Travis's investors, and this is what we specialize in. Travis has access to a bunch of different programs, but we're just going to talk about these great programs as an investor for Travis. Our bank statement, our debt service coverage, now our second liens, HELOCs and close on seconds, and that's what we do. And Chris said 9%, I'm looking up here, 9% of the loans we close on our bank statement program are actually realtors. So you get 12 realtors in the room, you're going to get one of their loans, we promise you. So have we forgotten anything, Lisa, Chris?
not that I can think of.
Okay. Yeah, so guys, it's about 15 minutes to the top of the hour, a couple things. This is being recorded. This will be sent out to you before end of day tomorrow. If we didn't get to a lot of these great questions, This program's new to a lot of you, even us, but we know it inside and out already. So, allow us to help you create your next, business, to get to these borrowers who are locked into these low rates. Almost 85% are at 6% and below. They're not getting out of those loans anytime soon. Create your own little cash out refi boom using these close-end seconds or using any of the programs across any of the great programs that we have across our platform. I will share, a lot of people asking who's my AE. I'll throw out my email address is johnj@8, you know what, let me see if I can pull it up here. So, because you can find, but Lisa, anything in closing while I bring that up, so.
No, I think that this is just kind of exciting because we've all been kind of stagnant with what do we do? How do we call our borrowers? What do we call them with? What kind of information, and this is, if anything else, just a way to stay top of mind for your borrowers. You are their equity specialist, right? I mean, basically they, but it's even if they don't need a second or whatever, you call and say, hey, I remember we got you in this great rate at 2.8%, back in a couple of years ago, but I wanted to let you know that we've come out with these great products. And, it's just a really good way and reason to pull up your pipeline from 5 years, to now, and give them a call. If they don't need it, someone else may. And it's just this happens. This is part of the mortgage business. It keeps us employed because it's really job security that Americans, when they save some money, we should put it back towards principal of something. We just say, oh, we can get a new payment to fill that gap of that payment. So now we have a whole bunch of equity and a whole bunch of debt, and that is perfect for a second mortgage. So.
Yeah, Chris, anything in closing?
I just think, our business is based on referrals. Now that, we've considered this homeowner that's at a 3% rate, kind of a dormant customer. Now you can actually go in and you can have them as a customer. You have a product to sell them, and you never know where that's going to take you. So, whether it's purchasing another property or referring you to another person, we're just really excited about the changes.
Yeah, Chris, I love the way you use it. You consider that borrower that's in that really low rate a dormant customer. They don't have to be. I love the way you say that, man. I'm going to use that on anything going forward. They don't have to be a dormant customer. That's great. You guys, my phone number's up here. Text me, call me. I'll get you in touch with your account executive. My email address is just johnj@angeloakms.com, ANGELOAKMS.com. Again, this is being recorded. We will get this out to you before end of day tomorrow. There is a little survey afterwards. We do a lot of these. We've probably done over 150 over the last few years. We're always looking for ways to get better. So please provide us some feedback. Also, we'll be doing webinars every Thursday, probably throughout the rest of the month. And there's a couple people on here who have closed loans with Angel Oak. So thank you for trusting us with your business. For those who have not, maybe this is just another excuse to do work with us. I think that self-employed HELOC program is going to be big. So, like Chris said, go after those dormant buyers and borrowers and get them. But for those who haven't, give us a chance. We'll earn your business, I promise you. On behalf of everyone here at Angel Oak Mortgage Solutions, we appreciate you and we look forward to working with you in 2024. So have a great day. Thanks.